So the markets are just acting crazy right now. There's so much panicking which is happening in the market. The Feds are all over the news. There's so much volatility in the market right now in the current situation. Also, if you see, a lot of companies are actually seeing a correction in their prices. A simple example can be Facebook or a Paytm. Right? There's so much correction which is happening. So because of all these reasons, there's so much panicking. And in this video, I'm going to break it down into three single parts, right? One, we're going to discuss the analysis of the current market situation. Then we're going to understand the outlook for the next few months. And finally, we're going to look into you and me as a retail investor. What should be our focus? So a very important video. So make sure you do watch the video till the end. And if you do find this particular video useful, make sure you do like it and you do subscribe as well. Now, let's first actually understand the current market situation, because this is extremely important from an investing point of view. You need to be very sure what is currently happening in the market before you invest any amount of money. The very first thing is inflation. We all know inflation has been at an extremely high rate, right? We're currently sitting at 7% inflation, which is actually the highest inflation rate in the last 40 years. So definitely inflation is off the roof. If you see the last one decade itself, inflation was trending between 2% to 2.5%. But ever since COVID hit and Feds printed so much money, inflation is currently at 7%. So definitely inflation is a massive rate. Also, what you need to understand is it doesn't affect only us as a consumer. It also affects the companies, because right now companies are finding it more and more difficult to purchase raw materials because the cost of raw materials have gone up, but at the same time the cost of the final product, that is the selling price, has not gone up, because of which their profit margins have taken a hit. Now, because the profit margins have taken a hit, the company's stock price have gone down. So definitely it impacts these companies and it impacts these stocks as well. Second main reason is the Fed's update. Now, we have no clear indication in terms of what is going to be an update from the Feds in terms of how are they planning on controlling the inflation. Now, we know that they are planning of meeting towards March or towards April, but there's no clear indication in terms of what the outcome will be. Now, whenever there's uncertainty in the market, there's always panicking. Because of this panicking, a lot of volatility tends to happen in the market. Third main reason is that if you see the Nifty or if you see the Nasdaq, right, the Nifty has been trading between 16,500 to 18,500, multiple ups and downs. So it is definitely moving slightly into sideways market. And if you see the Nasdaq has actually come down by nearly 8% or 8.5% just in this year itself. Also, if you see the data of short selling, more and more people are actually short selling in the current market because they are expecting the market to actually crash at a massive rate. Now that you have actually understood what is the current market situation, now you need to understand what can be the possible outcome of this entire situation right now. And for this, we'll first go through the historical data, because this is not the very first time that the Feds have actually increased the interest rate. They have increased before in 1994, in 2004 and in 2016. So this is not the very first time that people are panicking so much. And definitely we have the past history and the past result as well in terms of how the market did react. Now, very first thing is you need to understand how the emerging markets like India and etc., how these markets get affected when, let's say, Feds increase the interest rate, let's say in US, for example. Now, the purchasing power of these countries actually becomes, capital becomes more and more expensive. What this means is that a lot of these companies, or a lot of companies in these countries in the emerging markets actually get a lot of funds from US. Now, when the interest rate goes up, that means it becomes more expensive to get these funds. Also, second is that definitely when the interest rate on bonds, etc. goes up, a lot of capital from India will also tend to go into the US market in search of a better yield. Now, this is the chart on Nifty from back in 2016. So if you see over here, with the Feds actually announcing that they are planning on increasing the interest rate, you can clearly see there was a lot of panicking in the market. The market did have multiple pull downs, right? We did even see a small crash over there as well. And after the market started going up when there was more certainty in terms of what is going to happen in the market. Also, if you see, overall the market did go sideways for almost a span of 2 years. So overall, there was panicking, and there was a lot of panicking before the Feds actually announced. The Fed just announced that there will be inflation, and because of that, they are planning on increasing the interest rate. And after that, once there was a clear-cut indication in terms of what is currently happening in the market, then the stock market started going up again. But overall, it was in a sideways trend. If you see the Nasdaq as well during the same time period. So Nasdaq, for example, over here, you can clearly see the entire market from 2015 at least till 2017 was again a sideways trend. Again, in 2016, we did see a crash, and after that, the market was pretty much in a sideways trend once there was a clear indication in terms of what is currently happening in the market. Now, if you see the data from 2004 onwards, so now this is the data for 2004. Again, a similar trend. In 2004 as well, the Feds announced that they will be actually increasing the interest rate. But at that particular time period, the announcements were not made much in advance. Like right now, for example, the Feds have been giving a clear indication that they are planning on increasing the interest rate. Something similar was done in 2016 as well. But back in 2004, there was not much clear indication given. And because of that, there was not much panicking which is happening in the market. The Feds ended up doing it, and you can clearly see there was a pull down, after which the market actually came back. But overall, the market was again in a sideways trend for a span of almost 2 years. Now, quickly summarizing in terms of what you and me as a retail investor, what our focus should be. The very first thing is you need to understand that a lot of professional traders, a lot of institutional investors will be holding on to their capital right now purely because they want to get a clear picture in terms of what is going to happen in the market. But as a retail investor, we need to think from a long-term perspective, because from a short-term perspective, there can be corrections, and these corrections can be a value buying opportunity. But from a long term, the market will continue to go up because the economy will continue to grow, right? Second main thing is that rebalancing your portfolio. Right now would be a great time to rebalance your current portfolio and getting rid of all the small cap or companies which do not have strong fundamentals, and only keeping companies with strong fundamentals, because those will be what makes Nifty or Nasdaq actually go up in the near future, or at least when the market is currently moving towards a sideways trend. And third and main thing is that not panicking, because we will have a much more clear idea by Q2. By Q2, you will have a clear idea in terms of what the Feds are planning, what the interest rate will be. So accordingly, the market will see much lesser bull run or bear run, and we'll see a much more stable market by Q2. So I hope you actually found this particular video useful. I hope you actually understood what the current market situation is, what the outcome of the current market could be, and accordingly how you need to invest or how you need to plan in the current situation. So I hope you actually found this particular video useful, and if you did, do hit the like button, do subscribe, and I'll see you all in the next video.